Bitcoin is an anti-debasement money. Bitcoin is often celebrated as a groundbreaking form of money, particularly for its ability to serve as a shield against currency debasement. In a world where traditional fiat currencies are vulnerable to inflation and devaluation due to government policies and central bank actions, Bitcoin stands out as a decentralized alternative that resists such manipulations. We explore the key features of Bitcoin that make it an effective hedge against debasement, highlighting its unique design and growing significance in today's economic landscape. Understanding debasement. To appreciate Bitcoin's role, it is vital to first define debasement. Historically, debasement occurs when rulers reduce the precious metals content in coins, lowering their intrinsic value while maintaining their face value. In modern times, debasement manifests as inflation, where the purchasing power of money erodes due to increase in the money supply. Central banks, through policies like quantitative easing can expand the money supply, often leading to inflation and a weakened currency. Examples like Zimbabwe and Venezuela, where hyperinflation devastated economies, illustrate the severe consequences of such practices. Bitcoin, however, is engineered to counter these risks. Its design incorporates features that protect its value and ensure its resilience against debasement, making it appealing option for those seeking financial stability. A fixed supply, the foundation of scarcity. At the heart of Bitcoin's anti-debasement strength is its fixed supply cap of 21 million coins. This limit is embedded in the Bitcoin's protocol, ensuring that no additional Bitcoins can be created beyond this amount. Unlike fiat currencies where central authorities can print money at will, Bitcoin scarcity is absolute and predictable. This fixed supply mirrors the scarcity of precious metals like gold, but with a digital twist that eliminates the possibility of arbitrary expansion. The creation of new bitcoins occurs through a process called mining, where participants solve complex mathematical problems to add blocks to the blockchain and earn rewards. However, the rewards diminishes over time due to an event known as halving, which occurs roughly every 4 years. During a halving, the number of new bitcoins issued per block is cut in half, slowing the rate of supply growth. This mechanism enforces Bitcoin scarcity, and the issuance of new coins gradually tapers off, enhancing its value as a deflationary asset. Decentralization, power to the network. Bitcoin's decentralized nature is another cornerstone of its resistance to debasement. Unlike fiat currencies, which are governed by central banks and government, Bitcoin operates as a peer-to-peer network without a single controlling authority. This structure prevents any one party from manipulating the money supply or altering the system's rules for their own gain. Changes to the Bitcoin protocol requires broad consensus among the network participants, achieved through mechanisms called proof of work. This decentralized governance ensures that the system remains secure and resistant to inflationary pressures. The absence of central authority also protects Bitcoin from censorship or interference. In traditional systems, government can impose digital controls or devalue currencies to manage economic crisis. Bitcoin, by contrast, empowers users with financial sovereignty, offering a safeguard against such interventions. Transparency and trust. Bitcoin's transparency further bolsters its credibility as an anti-debasement asset. Every transaction is recorded on the blockchain, a public ledger accessible to anyone. This openness allows users to independently verify the total supply and ensure the network's integrity. In contrast, traditional financial systems often lack such clarity, with central banks operating behind closed doors and monetary policies shrouded in complexity. Bitcoin's auditable nature builds trust, and users can confirm the system confirms that the system adheres to the rules, that the supply remains capped. This transparency stands in stark opposition to the opacity of the fiat system, where the true extent of money creation may not be fully disclosed. With Bitcoin, the certainty of its fixed supply and visibility of its operations make it a reliable store of value. A global currency. Bitcoin's global and borderless nature enhance its appeal as a hedge against debasement. Traditional currencies are tied to specific nations, subject to local economic conditions and policies. In, in countries facing high inflation or instability, citizens often have few options to preserve their wealth. Bitcoin transcends these limitations, accessible to anyone with the internet connection, regardless of the location. This universality makes it a lifeline for individuals in economically troubled region, allowing them to convert weakening local currencies into a more stable asset. The ability to move value across borders without intermediaries or restrictions further strengthens Bitcoin's role. In a world of increasing capital controls, Bitcoin offers as a way to maintain purchasing power beyond the reach of failing national currencies. Institutional adoption and growing demands. Rising acceptance of Bitcoin by institutions underscores the potential of an anti-debasement tool. Major companies like MicroStrategy, Tesla, and Square have allocated significant portions of their treasuries to Bitcoin, viewing it as a safeguard against inflation and currency weakening. This trend extends beyond cooperation, with the nations like El Salvador adopting Bitcoin as a legal tender, signaling its legitimacy as a global currency. Such adoptions boost demand for Bitcoin, and its with its supply fixed, the increased interest often drives price appreciation, reinforcing its value proposition. This institutional embrace reflects a broader recognition of Bitcoin's reliability. As more entities turn to it to protect their wealth, Bitcoin's status as a debasement resistant asset gains momentum. Addressing challenges. While Bitcoin's strengths are clear, it's worth acknowledging that challenges it faces. Price volatility is a frequent critic, with significant fluctuations occurring over a short period. However, as an emerging asset, this instability is not unexpected, and many believe that greater adoption will stabilize its value over time. For long-term holders, these short-term swings are less concerning, given Bitcoin's consistent upward trajectory since its creation. Regulatory uncertainty also looms as a potential hurdle, with governments exploring ways to oversee or restrict its use. Yet Bitcoin's decentralized design makes it remarkably resilient. Shutting down a global peer-to-peer network is a formidable challenge, ensuring its endurance against such threats. Environmental concerns are about Bitcoin's mining's energy use, another point of discussion. The process is indeed energy intensive, but the industry is shifting towards renewable sources like hydroelectric, solar, and wind power. Additionally, the energy demands of traditional banking and gold mining are often overlooked, suggesting that Bitcoin's environmental impact should be viewed in context. The security provided by these energy use the critical components of debasement resistance. Bitcoin in historical context. Bitcoin represents a new chapter in the evolution of money. From commodity-based currencies like gold or fiat system backed by governmental trust, each form of money has faced debasement risks. Bitcoin, as the first digital scarce currency with the immutable supply, combines the durability of financial assets with the efficiency of digital transactions. Its permissionless nature invites global participation, fostering innovation and resilience. However, Bitcoin promotes financial inclusion, offering a solution for the unbanked and underbanked. By providing access to the stable store of value and means of transaction without traditional infrastructure, it empowers individuals to escape the cycle of debasement plaguing many local economies. In conclusion, Bitcoin's design as a scarce, decentralized, transparent, and global currency positions it as a powerful antidote to currency debasement. Its fixed supply prevents inflation, its decentralized network resists manipulation, and its transparency ensures trust. As adoption grows, spanning individuals, corporations, and nations, Bitcoin's role as a store of value strengthens, offering a compelling alternative to fiat currencies vulnerable to erosion. Despite challenges like volatility and regulatory scrutiny, its resilience and potential shines through. In an era of economic uncertainty, Bitcoin emerges as a beacon of financial independence and robust hedge against debasement of money.